What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, lock it in with a thumbs up. That's really important. It helps this YouTube algorithm get this content out to more people so we can help more people. So do me a favor, hit that thumbs up for me. Lock it in with a thumbs up if you appreciate the content. Hit that post notification bell so that you're notified every time I upload a new video. If you want up to 15 free stocks, Moomoo is going to give you up to 15 free stocks when you open a new Moomoo brokerage account. Put $100 in that brokerage account, they're going to give you 5 free stocks. You put $1,000 in that brokerage account, they're going to give you 15 free stocks. There's a link down in the description box of this video. Go click on that Moomoo link. Open up that new Moomoo account today. Go get that free stock. Go get that free money. So one of my subscribers asked me this question. Richard, with the stock market at all-time highs, AKA S&P 500, did hit its all-time high, over 5,000 points. Are you concerned that there's going to be a crash? You know, can the stock market sustain this type of rally? And my answer to that subscriber is yes. I think the stock market will continue to bounce, continue to rally, as long as companies continue to bounce, continue to rally, continue to grow. Because the stock market is only made up of companies, guys. That's it. That's the secret sauce. Companies. And as long as companies in the United States are doing well, they're profitable, why wouldn't the stock market continue to go up? The S&P 500 represents the broader stock market. You got the top 500 companies in America. And with the S&P hitting 5,000 points, that just tells me those top 500 companies are winning. And you take the top 7 companies, the Magnificent 7, they are really, really, really winning. And they represent 28% of the value of the S&P 500. The other 493 companies represent 72% of the power of the S&P 500. Interest rates for 2024, 2025 are going to play a key role in how well the stock market does, though, and how far up it goes. There are some indications out there that the S&P 500 can hit 5,500 points by year end. That is manageable and doable, depending upon what the Fed does with short-term interest rates, which the market believes the Fed will reduce short-term interest rates. I believe they will as well. How much they'll reduce them, I don't know. No one knows. But I do believe they will reduce. I believe they will reduce short-term interest rates 3 times this year. Now, I don't know, like I said, I don't know how large they'll be, but a lot of people are speculating 75 basis points. That only helps the stock market. Why? Because anytime companies can borrow money cheap, then they borrow that money and invest it in their growth. So if I can borrow money 75 basis points cheaper than I can today, I may take that cheap money and go invest it into my growth. And if I get a better return on the growth than I borrowed the money for, then that's a win-win for my company. Question is, should you be investing when it's going up? I think you should. Like I said, the S&P is expected to hit by a lot of analysts. Now, that doesn't mean it's going to do this, but here's the expectation. It could get to 5,500 points. So if it's at 5,000 a day and I can start investing and it gets to 5,500 points by the end of the year, that's a good thing, right? That's a good thing. I invested at 5, it's worth 55. You don't got to be a rocket scientist to figure out that's a good thing. Your money is going to grow. It's going to multiply itself. So for me, it's a game of looking at history and trying to figure out what history tells me the stock market will do in the present and in the future. History tells me when you look at the S&P 500 over the last 90 years, it's returned 7 to 10% on my money. So the likelihood of it doing that again increases because it's already done it, especially in the environment where we're getting ready to see short-term interest rates come down. And anytime them short-term interest rates come down, the stock market goes up. Rates come down, stock market goes up. Why? Because the stock market is made up of companies. And when companies can borrow money cheap, they borrow it and they put it into their growth. And if I can borrow money at 4% and I can get a 10% growth out of that money I borrowed, that's a net of 6%. Their stock price goes up. And when their stock price goes up, the value of their company goes up. And therefore, if they're in the S&P 500, the S&P 500 goes up, right? So don't be afraid to invest when times are good, especially if history is on your side. I'm not afraid to invest. I think this is a great time to invest because I believe the stock market is going to be worth more tomorrow than it is today. So the money that I put in today will be worth more tomorrow. So don't be afraid, guys. My strategy is pretty simple. I got 2 ETFs that I'm going to be investing in. One is an S&P 500 ETF that tracks the S&P 500 index. That's SPLG. That's the ticker symbol. Go look it up. So that's my broader stock market ETF that I'm going to be investing in 2024. Now, my sector ETF that I'm going to be investing in is FTEC, which is an information technology ETF. Top 375 companies in America is in that fund. That's going to be my sector ETF. And then my individual stocks are going to be the Magnificent Seven, right? Apple, Microsoft, Meta, Alphabet, Amazon, NVIDIA, and Tesla. That is the wealth transfer blueprint that I'm going to be using this year when it comes to paper assets. Guys, don't be afraid to multiply your money when you have history on your side. Now, the stock market is up and down. Anything can happen. There is some risk associated with investing in paper assets. But when you're in a building stage of wealth, you got to be willing to take on some risks, especially when it's risk that's calculated, because you know what the history of the stock market says. If you just go do a little research, I've given you some cliff notes. My recommendation is get out there and do some homework. But don't be afraid to multiply your money, especially if you're in the building stage of wealth. Now, if you're somebody in the enjoyment stage of wealth and you've already built your wealth and you're trying to protect it, I certainly understand not having all your eggs in one basket, right? Maybe you want to take, 60% of your money and go protect it and put it in bonds or something. Maybe go do you a 5-year treasury bond or something. Or put it in laddered CDs at your bank. And maybe you keep 40% in the market just to get some growth on the money. I get that. You can do a 60-40 split if you're in the enjoyment stage of wealth. But I think if you're in a building stage of wealth and you're trying to grow your wealth, for me at least, I keep 100% of my money in equities because that's where the growth is, right? I got to take a little bit more risk. But I reduce my risk because I invest in the S&P 500, which is diversified in itself because I got the top 500 companies in America in it across every industry, every sector. So that's diversification, but it is concentrated when it comes to equities. But I know that because I need the growth, right? When I get to the enjoyment stage of wealth and I'm no longer actively earning income and I need to protect my wealth, at that point I'll start pulling it out of equities and put it into something like bonds to protect it, right? But for right now, I ain't looking for protection. I'm looking for growth. So yeah, the stock market is where I'm going to hang my hat. You got to figure out what your strategy is in order to take advantage of this great wealth transfer that's happening in 2024. If you want up to 15 free stocks from Moomoo, you got to click on that Moomoo link down in the description box. You got to open up your Moomoo account. You got to put $100 in there. They're going to give you 5 stocks. If you put $1,000 in there, they're going to give you 15 free stocks. And now you're ready to buy paper assets. You're ready to buy ETFs. You're ready to buy individual stocks in order to take advantage of this wealth transfer that's going to be happening in 2024. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash that like button, guys. Lock it in with a like. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you guys on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.